Financial services have gone digital, and this is transforming the developing world. More than 70% of adults have a mobile or online bank account. This access to convenient, transparent, and secure financial services changes lives. Through digital finance, people have the power to improve their earning potential, women's economic participation, and the broader inclusivity of their society.
There's different factors, there's different barriers that impact genders differently in access to financial services. The government needed information on you to verify who you were, and in many cases, there's gender differences in being on existing registration platforms, as well access to phones. In many cases, there's one phone for the house. Those support services were delivered to only one phone, not to multiple accounts on one phone, and typically that would be the man that had access to the phone. So that had several ramifications in terms of access to those funds and also then on where those funds were spent.
Digital payments connect everyone to the global economy and can help people weather unexpected income shocks. Take Bangladesh, for example. When the COVID-19 pandemic struck, the government worked with the private sector to make sure garment workers did not lose their wages due to lockdowns. Digitizing wages for garment workers resulted in greater financial agency for the 2.4 million women in Bangladesh who work in this sector. Similarly, Colombia's Ingreso Solidario program uses a combination of digital payments options to improve the lives of 4 million poor households in the country. And in Ghana, the government made it easier for people to access financial services by removing fees for low-value remittances, relaxing transaction size limits for mobile money, and several other improvements. These examples show how countries can make strides towards greater financial inclusion. But obstacles like lack of trust or education, high transaction fees, and inadequate consumer protection or customer service are preventing digital payments from reaching their potential.
There's a set of barriers that have been studied on general access to finance, like levels of financial literacy, knowledge of different financial services that are out there, and access as well. There's physical access, there's digital access.
With 1 billion women still excluded from the financial system and 2.5 billion people still transacting only in cash, there is still much work to be done.
One thing that is important is to embed the capacity building in that G2P distribution where we can. And what helps with that is fully understanding the customer journey. Customer journey mapping is an important component of learning where there's touch points along the way. You want to know, where do women actually interact with the financial sector and accessing any funds that are being sent to them? And that could be at a bank agent, or they may have the capacity where they are actually accessing it on a mobile platform. Another important practice is to not just deliver the funds and then assume that it's going well. Engaging with them, monitoring, and including them, including women, including the recipients in conversations as the program is unfolding is also an important step of learning what's working well, what's not working well, what can be improved.
Governments and businesses need to continue to break down these barriers in order to create truly inclusive financial systems for all.